Let's talk about today's live stream sponsor, ProfitX. ProfitX allows traders to get up to 1.2 million in simulated capital for their trading. But on this simulated trading capital, you get an 80% profit share of the simulated profits. That's real money on simulated accounts. They also offer unlimited trading days to their traders, so there's no kind of number of trades you can or can't place during the duration of your challenge. They also allow their traders to trade 800 plus assets, so you can pretty much trade anything with this one prop firm. When we look into sponsors for this show, we do also make sure that the team behind the scenes seems as professional as possible. This is a big team, not a kind of influencer or solo run ship. This is a professional team running ProfitX, so I want to encourage you, check them out, do your own due diligence, and see if this is the right firm for you. Now back to the stream.
All right, everybody, welcome back and good morning, good afternoon. As you just saw, make sure to check out, if you have not already, our newest sponsor, ProfitX. You can find out all the different options that they offer for those looking to get funded. And again, special shout out to them for sponsoring the live stream. So let's see. Yesterday we had a big, well, pretty interesting day. NASDAQ was up pretty good yesterday. S&P 500 continues to grind off of these lows here. You had 58.80 come into play. Support held pretty decently so far. But for the indices players out there, what I'm looking for is to see if we can actually get back to these highs. But more importantly, can we actually break those highs, right? So if we can get above those highs, then that would be a bit more of a clear signal that likely the bull run continues. Specifically, yesterday we had some NVIDIA news, which is a stock that I've owned for a while. We can see NVIDIA's up here nicely this morning, up another 2.4%. Jensen Huang, the CEO of NVIDIA, yesterday basically gave a big old presentation and talked about some new gaming chips that are coming out for NVIDIA, customers. And just, anytime the guy speaks, usually there is an optimistic response. He's very good at inspiring shareholders. That is Jensen Huang. That being said, nothing goes up forever, but NVIDIA has actually not been going up in a while. If you take a look at NVIDIA's performance, it's hitting new highs today, but for a suspended period of time, if you had bought in like June of 2024 and held it for 200 days, you'd be about break even. You could see kind of even great stocks can take breaks. So, NVIDIA, a bit of a squeeze here, finally making a push higher, and actually looks quite good. Semiconductors are an area of the market that I really like right now. Moving with some really good momentum off the back of this NVIDIA play. I am long SMH. I've got my stop loss in play also on this one. Now in profit, I really like the semiconductor space going into 2025. Got a nice overall uptrend, although the last, like I said, several months have been kind of a dud for the semiconductors. They've really gone sideways. That being said, I still really like the trade, and my stop loss is now above my initial entry. So I can't lose money on this. Bought the dip here on SMH and finally starting to see some rewards for all that waiting that I've been doing. If this market rolls over and breaks this key support here, I'll stop out. And if it wants to continue, if we can break through this key level of resistance, then wonderful. I will look to trail my stop loss further if we get the breakout. That's at least how I'm personally playing the semiconductor SMH ETF. It's a key position for me right now. And we'll see if it can continue to play ball. I also have some bullish positions on the Russell. So nice start to the day. Russell's up 0.4%. Russell is, of course, the Russell is the small cap index for the United States stock market. And it's another position that I have in 2025. I feel pretty good about the idea of a possible rebound in the Russell. Now, I mean, last year was a good year for the Russell, but it wasn't a great year. The Russell was up somewhere around 10%. And, you had the NASDAQ up 25% or whatever, 20 something percent for the S&P 500. So the Russell has lagged the others. I think there's a bit of a potential catch-up trade, especially if you do get some rate cuts this year. which I guess recently hasn't been super promising. If we take a look at yields, yields have been on the rise. The 10-year yield up back to 4.64, let's call it. So yields are on the rise. That's creating some dollar strength. That's creating specifically for parts of the stock market that are sensitive to where interest rates are. This has not been a great story, although the rise in the 10-year yield has mostly been ignored by the big players. I'm talking about your Apples and your Amazons and Nvidias, Microsoft, those ginormous companies kind of seemingly just ignoring the rise in the 10-year yield, which of course is a rise in borrowing costs. So what's not ignoring it, however, though, is the Russell and the Dow Jones. These very rate sensitive parts of the market are not loving the rise in the 10-year, which is suggesting that the Fed may not cut rates as much. What is loving it is the dollar. Dollar's been really strong off that for the most part. The rise in the 10-year has contributed to a stronger US dollar as US economic data continues to roll in pretty strong. Meanwhile, counterparts like Europe, the UK, and other places are just seeing a bit more of a slowdown in their own economies. For me, the dollar index, until it's one of those things, it's innocent till proven guilty. I have a long position on the dollar against the Swiss franc right now. So I bought an initial position. It's not a big trade for me, but I bought an initial position here with willingness to add to dollar Swiss had it gone down, and it still could. If we see lower prices on dollar Swiss, I'm going to build a longer or a bigger position on this this move here on dollar Swiss. I still really like the story for the dollar at this time. Again, we're sitting at support for the dollar. Let's see if 107.8 can hold, which is this area right here. Let's see if that continues to hold. But so far, it's been a decent response price action wise to for the dollar. Bitcoin's down about 1.56%. This is another pretty good sized position for me. So coming back a little bit today from yesterday's big pop. Yesterday, we were up somewhere around 3.5% on the day for Bitcoin. So really nice move there. Now pulling back. I like the way, again, Bitcoin seems to be moving with a lot of momentum. It's a big trend right now. And of course, big trends end, but trying to call the top on that is a really challenging thing. A lot of people think that this is the top. Like there's a lot of people who have started calling for, this is the big reversal. Bitcoin's done. We hit the 100,000 and then, we're going to have a big reversal. But I actually think that 2025, we're going to continue to see Bitcoin make a run. And I want to just clarify that if I'm wrong about that, I'm not, an all-in ride till I die kind of Bitcoin person. I'm just trading it. So I have a stop loss on my trade here. So if this market completely falls apart and I'm wrong about thinking that Bitcoin could see higher prices this year, then I'll stop out. And it's also possible that I could be wrong about this timing right now. Then ultimately Bitcoin could make prices, this year. This is why trading is difficult. You could be right in direction and wrong on timing. But for me personally, I like the momentum that we're seeing in Bitcoin. Yesterday was a nice, pickup in momentum. We'll see if it can persist. We'll see if Bitcoin can hold these recent gains, stay above 100K. I think that's a pretty big psychological level now is, we're at this 100K point for Bitcoin. Are we able to hold that territory, or are we going to just kind of chop around up here? And it's possible that could be, we might have to do some waiting on this idea, right? There could be some waiting on this idea of, okay, we've made a run to 100K. Let's see what happens now. A lot of this is hype about, the incoming switch in presidencies, right? So Donald Trump taking over in 13 days or so. There's some optimism about, just generally speaking, the administration be a little bit more lenient towards Bitcoin or even favorable towards it. There's some interesting stuff going on in the stock market world too. As MicroStrategy was up 11.6%. This is Michael Saylor's company, where he's been just adamantly taking invested capital into the stock and just buying Bitcoin with it. It's a crazy kind of story, and to be honest, makes me a little bit nervous. Sounds a little bit toppy to me, to be completely fair. Doesn't mean that Bitcoin has to, crash to zero or anything like that. But does make me a little bit nervous when you hear that kind of story. But hey, right now, while the momentum is good, it's a positive catalyst. This aggressive buy every single dip Bitcoin catalyst for a little while seems to be continuing to push prices higher. But we'll see. That's a bit of a house of cards for me. So I'm a little cautious about that story. I'm not playing MicroStrategy at all. I know a lot of people who are trading the stock. They're doing options on the stock, and then it's a little bit too volatile for my taste. I got a position I want to show you guys. Here's a losing trade that I'm dealing with. This is TLT. This is long duration government bonds, and I have a long position in this one. So I bought TLT in a unique way. I actually shorted puts on TLT around $91 a share. And of course, TLT plummeted. And what that means is I had to buy the shares at 91. But why is my entry 90.28? Because I got paid a premium to short those puts. And if you're not an options person, I know it can sound complicated, but and this is a bad example of an options trade gone wrong. I mean, it's not the end of the world or anything for me, but it's an example of a trade that didn't work out. So I shorted puts at 91. I got assigned, which means I had to buy the shares as I essentially promised to do through the options contract that I sold. And I got assigned at the strike price of 91 minus the premium that I collected. So I got assigned at an average cost of $90.28 on TLT. I'm going to hold this position. I would like to see this thing obviously move higher. And if it does, how would I manage this trade? Well, what I do is a variation of the wheel strategy. In an options land, if you're not familiar with that, you essentially sell cash secured puts. Then when you get assigned, you own the shares, you can look to sell calls against your position. So what I'm looking for, I would like to sell calls on TLT, but there's very little premium down here. What I mean by that is that nobody's really going to give me a lot of money if I sold them a call at 92, right? Because 92 is so far away. So if I sold 30 days out, $92, that's not worth a lot. But if the market does this, and then I sold a $92 strike price call, I could make some good premium, collect some good money. And again, that plus the premium would get me, $92.50, $93 per share would be my exit price. I would see some appreciation on my position and options contract premium. I know it's a bit complicated if you're new to options. Don't let it scare you. It's really not that complicated. You essentially, when you go to the casino and you play blackjack or roulette and there's like a slight edge in favor of the casino, but you might still play. Well, as an option seller, you essentially play the casino. If somebody sits down and plays, roulette on TLT in this example, I'm the casino where I'm selling you an option contract. I'm collecting a extra premium that puts the odds in my favor and letting someone else take the bet of where they think the market's going to go. Anyways, it's a portion of what I do in my portfolio. It's not the only thing. I do, of course, trade a lot of momentum stuff. I mentioned earlier, my SMH trade is kind of my biggest trade right now. That and the NASDAQ are two larger positions that I'm working with. Got some nice momentum here on the NAS at this time. NASDAQ back in the bullish territory. Love to see that. US oil, got to check that one because that's another watch list item for me. I'm already long dollar Swiss. This was another Edgefinder call out, so I'm going to continue to play that side of the trade. Dollar Swiss, good start on that trade. NASDAQ, we're in the green. And Bitcoin back in the neutral territory, but was a bullish reading when I took the trade. So just going to continue to trail stops on that one if we can get a profitable runner. Okay, let's take a look at some of the bearish readings. We've got Kiwi dollar, pound dollar, some yen crosses. Don't love this since I'm long TLT, which is, bonds. So we have US 10-year bonds getting a bearish reading. So that's kind of going against my philosophy there, but I'm just going to continue to play the trade as I just recently outlined. So anyways, I would also like to see the Russell pop into positive territory. The Russell's a position that I have right now, and it's been neutral. It's actually gotten worse on the scorecard. Let's take a look at COT data. This is maybe what's going on here. So if we pull up institutional money, see what's going on with the Russell, you can see the Russell's not as favored. It's 49 to 51% institutional weighting. So institutional money is, for example, very long on things like gold, the Nikkei, oil, silver, NASDAQ. These are things that institutional money seem to be leaning bullish on. Dow, US dollar. There's some slight preference for being long these things by institutional money. And then on the bearish side, institutional money seems to be favoring shorting the Canadian dollar, which has been recently an interesting play. Kiwi dollar, the Swiss franc, which has been something I'm liking, is shorting Swiss, being long dollar. Shorting the Australian dollar, shorting treasuries. So very interesting. Anyways, in the recent, they just did a recent, in the latest COT data, there was some interesting buying of gold that went on. I thought that was kind of worth mentioning. Let's go take a look at gold. Gold's up 1%. So institutional money reported buying of gold here recently. We can actually look at the history of gold. Check this out. So if I go COT data history in the Edgefinder, I can look at the historical readings for institutional money flows. And what we can see here is actually institutional money has been accumulating more gold. So possibly a bullish catalyst there, although you can actually see net open interest has been decreasing. See how the overall length of these bars has been decreasing? That just means that less contracts are being opened, or less contracts are open on this. However, the proportional long to short ratio is rising for gold. So, I like to look at this because this is a bit of an aggregate of institutional money flow. Where is it flowing? Is it going into gold? Is it going out? Well, right now it seems to be going into gold, which is very interesting. You have a little bit of a mixed market perspective here, right? You've got kind of this pattern going on. Can we see the breakout here? I do have a gold long position, but it's not traditional. I have a GDX short put at $35 per share. So with prices popping up almost 3%, this is why this is the double-edged sword of trading GDX. I am shorting puts on GDX. That is a bullish position on GDX, which moves a lot more than gold. So it's up 3% almost today. It moves down harder and up harder. So I have a GDX short put, which is a bit more volatile, but that's a play I've got right now. So gold moving up definitely favors GDX. So looking for a breakout on gold, I'd like to see this thing break 2,700 again. If that can happen, we may actually start to get some Edgefinder readings that are more interesting on the price of gold, but still very much in the neutral territory. Trend flipped to the upside here. Gold is getting a positive trend reading, which is great, but some of the economic reads have been holding down the score in the Edgefinder for gold, which actually makes a lot of sense and has been a really good call to stay out of the way of gold recently, as it's been really notoriously choppy in the last few weeks. So something to think about. Also, by the way, guys, if you're interested in getting the Edgefinder, it is currently a new year, and we have a ton of new features coming for the Edgefinder and for the stock box. If you guys would like to try out the Edgefinder, we'll drop a link here in the chat right now to where you can get 30 days access to try out the software if it seems like something that would be beneficial to you. So what we'll do is we'll drop that apply link in the chat for you guys to fill out if you're interested. And I should clarify too that the trial is not a free trial. We do a paid trial for 30 days, and that payment gets credited towards your final purchase of the Edgefinder. The reason we do that, and sometimes people give us kickback on that, I mean, honestly, for people who are serious, they just take the paid trial. But the reason we do that is because we understand people want to try the software before they commit the full price. We get that. But on our end, we had this kind of phase of time where people were applying for free trials. We did free trials for a very short period. We're doing free trials. People would apply for free trial, get like the 1 week, and then at the end of the week, they would just change emails and do it again and again and again. So this solved the problem, because what we found is serious people don't mind putting down $99 to try out the software for 30 days, and then you can decide if you want to keep it forever, and that payment gets credited towards the rest. So if that's something you're interested in, apply using this link right here. It's in the chat, and someone from our support team will get you hooked up with a 30-day trial. Why not trade gold ETF? Good question. I do trade gold's ETF all the time, but I like GDX specifically just for the volatility increase, a little bit more volatile. NASDAQ down 0.36% here this morning, so a little bit of a give back. Bitcoin also seeing a pullback here, 1.75%. You've got the Russell up 0.4. Dow Jones up 0.4. A little bit of a rotation. How is our XLV doing? Is that doing okay? Look at that. XLV's up today. I've got a short put on XLV as well. So let me see. I'm just going to pull up my account here. Let's see where we're at with some of these positions today. So, okay, so XLV up nicely today. So XLV is a healthcare ETF that I shorted puts on at 138 a share. We've only got a little bit of time left on these puts that I shorted, so that's actually favorable. As time runs out when you're an options seller, it's better for you. If you're an options buyer, time running out is a bad thing. If you're an options seller, it's a good thing. It's part of the reason I love being on the sell side, is because as days pass, if the market doesn't move somewhere, your puts are becoming less valuable. And since you shorted the puts, that's good for you, right? Puts lose value over time, just inherently. So, we've also got ExxonMobil plays here. So I've shorted puts on ExxonMobil. This one's underwater, so I own some shares and I shorted puts. So both of those two things are underwater. So I'm down $500 on that play right now. GDX, so this is the gold miners ETF play. That one's back in the green. This has been in the red for the last few days. With just a few days remaining, by the way, this expires the 17th of January. I don't hate the idea of potentially even just taking the profit on this. I'm up 45% on that max premium for shorting that put. So I could close it out and collect $350 today and just move on to the next thing, which I'm actually seriously considering. I'll come back to that after stream, and if I make that update, I'll share it in our group. Gold up 1% today. Looks real good. Love to see that. Nick, why don't you make a monthly subscription for people who can't afford the full amount? Abdul, that is something that we offer. We do payment plans. So if that's something that you're interested in, if we could drop the link to our direct message center. If you're interested in the Edgefinder but would like to break it up into payment plan options, we do offer that. And if you would like, we do it on a custom basis. So we'll just work with you. If you'd like to speak to someone on our team who can set you up with a payment plan for the Edgefinder, if you want to access, the COT data, our top setups algorithm, all the different economic reads, if you just want to get it today, you can actually sign up for a payment plan with us, and we can split it up so that it is much more affordable to you on a monthly basis. We do offer that. So yes, just send us a DM. We'll help you out. Okay, so S&P 500 is positive. Some divergence here in the little bit of a reversal, I'm going to guess, on yesterday's price action. Yesterday, we saw the big players, right? Microsoft, Apple, Meta, Google, those ones were up a lot, which I own Google, so that was cool. Those stocks up a lot. I've got 100 shares of Google. I'm actually considering selling calls against my 100 shares at some point if it continues to rip. Today, we might see a little bit of a rotation. Maybe some of the non-mega cap stocks are going to look a little bit better. Let me play around with something too. I'm going to pull up the stock box for our stock fanatics in the room. We've been playing around with some heat maps. Let's see if our heat map is up and running. Yes, it is. So you've got Solar Edge. Is SEDG? Oh, look at Frank and I were talking about this yesterday. Dang it. Should have bought that right when we were talking about Solar Edge. Solar on the watch list here is our biggest winner for the day. Are you in? Lulu, Micron. Semiconductors are running right now, which is awesome because I have an SMH long position. But I'm kicking myself because I also looked at Micron. I didn't buy the dip on that one, which, oh my gosh, Micron's up 23% in a couple. That's the thing with individual stocks. They're incredibly volatile. I typically don't trade like heavy on individual stocks. I do have positions in individual stocks, but they're very tiny per position. Disney's up. I don't know if you guys saw on the stock market side of things, Fubo was a big interesting story yesterday, which did you guys see this stock? Check this out. Fubo TV. Oh my gosh, guys, this is crazy. And I'm gonna oust Frank. Frank owns some of this. It's up 340% in 2 days. Frank needs to buy me lunch at this point. That's crazy, man. That's crazy. Congrats to anybody who's got some long Fubo positions. But I mean, that's the thing with individual stocks. They can be so volatile. You can lose a lot of money. You can make a lot of money with individual stocks. I don't do a whole lot of individual stock like speculation beyond the mega caps, so the giant stocks. A lot of the stock trading that I do, like I showed you just a second ago, I've got positions in individual stocks. Like here's some of my trades right now. So I'm trading. Mostly what I trade is actually ETFs. This is the NASDAQ. These are the semiconductors industry. Here's Bitcoin, IBIT, right? But then I own things like Google, Nvidia, Uber, ExxonMobil. This is a Brazilian stock market ETF. MCHI is a China ETF, and TLT is my bond positioning. So I've got some winners, got some losers running, but semiconductors right now are definitely carrying me. So we'll see if those can continue to break out. But like finally, because I've had so much time here sitting in semiconductors that it's just gone sideways. So it's nice to finally see it starting to try to work. Also, quick shout out to stream regulars. I want to make sure I continue to, I'm checking this myself right now, but if you go to a1trading.com and you click this live stream schedule, you guys can always check the latest schedule. So for today, you can see we're on Tuesday. Up next, we're going to have Forex James join the show and go over some Forex and gold analysis. But the reason I show you this is if you're a stream regular, we've got a lineup of different people like, oh, this is cool. We got Daniel from, we've got Daniel from Instagram coming on, which will be fun. So you got all these different people who are coming on the show, and you can always check the schedule. So we've got JOLTS. So maybe what I'll do is I will stick around with James for a few minutes. We'll chat if he's cool with that, and then we'll watch PMIs, and I'll let him go solo. So we'll take a quick break to thank our video sponsors or our stream sponsors. We'll be right back with James just after this.
Trading is hard, but trading by yourself is even harder. This year is your year to join a trading community. The A1 Trading VIP Discord community is made up of thousands of traders around the world committed to helping you learn and to find better trade setups. Inside of the Discord, you can browse Trader Nick, Frank, and Ivan's trades on all things Forex, stocks, options, and ETFs. You also get exclusive access to Ivan's live coaching webinars, where you can learn from a seasoned professional in the industry and even ask questions during the webinar. We also have chat rooms filled with traders who share their thoughts and analysis daily. It's a space for both veteran and new traders alike to come together over their love of markets. Want to take it a step further? Upgrade to Pulver Alerts, where veteran money manager Chris Pulver shares his daily options and stock positions. All things A1 trading are happening in the VIP Discord. Start your new year off on the right foot and join today.
All right, and we're back with James. What's up, James?
Hey, Nick, I'm good. How are you?
I'm good. It's good to be on camera with you here today. And I pulled up your favorite. I know you love the dollar crosses, euro dollar, and such. What are your thoughts here recently when it comes to dollar? A little bit of a pullback in the dollar. Are you taking this as an opportunity to pick up some more positions? I know you've been trading euro dollar a lot. Are you still trading euro dollar?
Yep, that's all I've touched really for the start of this year. I'm still looking towards parity. I don't really see anything that's standing in the way. The dollar might be having pullbacks, but the Eurozone data is still not convincing enough, in my view, to induce any major buying. We might see pullbacks. Obviously, the market's very, very extended to the downside, specifically on higher timeframes, daily and weekly. But yeah, I just don't see any redeeming factors overall for this market.
Sure. So when we talk about the euro dollar pullback and potentially, I know you use primarily a dollar cost averaging approach. And for listeners, that basically means adding multiple positions, scaling in and out of an idea. So let's say, if you're bearish on the euro against the dollar, instead of just, all my positioning right here with the stop loss very tight, instead of doing that, we potentially take a short position and then add to it if it goes against us, perhaps to a bigger level of resistance, and just basically scaling in, scaling out, building small with it. So my question, James, is, and I have two questions for you that I've actually gotten myself because I use a dollar cost averaging method as well, but I'm curious what you think about this. First of all, how much of your dollar cost averaging approach is like technical versus simply just you're looking at your risk management, position sizing? How much of it is technical versus just purely watching your account status?
Sure. So I'll add in at major levels. Well, when I say major, I DCA trade on the 30 minutes, so it's never super major, but it might be, you know, relatively significant support resistance. So actually, here's a good example. I had one this morning. It was a very, very small position, but it was approaching this double top over the Bollinger Band. RSI was just slightly overbought, so I took a short. So it's basically just doing this. So it's looking at levels of possible reversals. If we're in an uptrend, I'm looking to sell. In terms of cutting position, so, you know, if this one went against me, likely would have cut the position on my fourth scaling. So I normally have 4 total positions that I'm willing to have open. And then if I need to place a 5th one, I will cut out of the initial position, add on another one. And that's essentially how it works.
Yeah, no, I love that. I mean, basically, you're looking for price to get to a point where it's overextended. You're using the Bollinger Bands, which I love as well, for kind of finding those peaks. And I also noticed on your chart where if you are looking left to where there was a kind of a downtrend push, in that scenario, you're not taking as many trades. Is that right?
Yes, correct. So it's basically mean reversion. So the reason I'm so bearish, and I'm only selling euro dollars again because of the economics. I'm very bearish on the currency pair as a whole. So during this move down, there was only one entry point that unfortunately, I just wasn't at my desk for, which was just here. This would have been the only chance. But then during this whole move to the downside, there's nowhere for me to get in. But if you look here, for example, I had 2 really strong entries that would have been huge winners if I just held them. But unfortunately, DCA doesn't work both ways. You can't have perfect entries and also hold for the whole move. In my case, anyway, I like to get in, get out, and that's just it.
Well, you get with everything in trading, there's always a trade off. So when you go for something where it's like, okay, with the dollar cost averaging approach, my win rate is going to be pretty high. I might not catch the whole move, but I'm going to be very frequently taking profitable trades and moving along. So, I think that there's different styles for everybody. I actually use both. I have a dollar cost averaging strategy that I primarily use for FX, and my momentum strategy, which I use for gold and indices and things like that. So it's cool to kind of mix and match on that. Okay, my second question for you is, and somebody asked me this, and it's a good question. How do you, with dollar cost averaging, since you're not using a defined risk stop loss, how do you manage risk?
That's a good question. It's not really straightforward, and I can't give you a set rule because I'll be honest, a lot of my dollar cost averaging is based on intuition and just how I feel about the markets. So my initial entry and sort of the second and third entry will normally be a set lot size. So for example, this is a $10,000 account. So I'm going in normally with a 0.3 to 0.5, depending on how confident I am in the positioning. Then as price moves against me, I'll basically do what it's kind of martingale, but it's a bit less aggressive. So I might move up 0.05 or 0.1 in lot sizes. If we're actually, hold on, let me just, there was one on euro pound that's a great example, actually. Sorry, just give me a second to find it here.
I also want to just reiterate too to the audience, if you didn't catch it. So James is using a combination of a dollar cost averaging kind of entry, exit, and risk management process, but he's still overlaying it with the macro. So it's kind of interesting because you're still, mentioning that you're predominantly looking to short something like euro dollar in favor of the U.S. economic data, et cetera. So you're using that macro layer and then using dollar cost averaging on top of it, which is very similar to what I also do with when I'm trading FX.
Yeah, well, that's the thing. I think if you're going to dollar cost average, it has to have something in its favor. Otherwise, it's fast track to blowing an account essentially.
Sure.
Obviously, mixed with risk management. But yeah, this euro pound one here is a good example because this one went against me quite aggressively. So I went in. I think this was a 1 lot initial position, then went in with 1.5, then 2, and then 2.5. But the reason I do that is because when I'm in a bad situation with dollar cost averaging, if you aren't able to get out of the position, again, it can get very, very nasty. So when I'm adding on positions at higher lot sizes, all I need to see is a small pullback, small reversion, small move. I can get out at break even or even in profit. So for example, this move basically was 2 losses and 2 wins, but I got out 1% profit because I scaled in slightly larger as price rose and rose.
Yeah. And, the interesting thing too about dollar cost averaging is, I'll give a little bit of my answer to that question that someone asked me is like, how do you manage risk? Well, for me, there's many ways to manage risk beyond just a stop loss. Now, it is very easy for somebody who is new to this stuff and does not know too much to just say, oh yeah, I'll just do no stop loss and it will be, easy money. But when you do have to deal with a serious drawdown, it can get dicey pretty quick. So how do you manage risk? Well, the answer is, in my experience, what I do, I know something about this market, which is I cannot control what this chart does. This chart could drop off the face of the earth for 6 months. It could get real ugly. How am I going to survive that? Well, what I can control, and what we can all trade as traders control, is our sizing. So for me, the big thing with dollar cost averaging is the smaller I start, the more I have room to be wrong before I'm ultimately right. If you're dollar cost averaging and you're heavy right here, and then you're going way heavier right here, it only takes one time where the market does not rebound well to crush your account. So to avoid that, my approach is incredibly small sizing and just looking to scale in patiently and not aggressively. And one thing that I like to do with dollar cost averaging is actually put time in between my next trade. Even if this market were to, for example, drop here and let's say I take a trade and then it's very quickly here, I'm not going to add a second trade too quickly to when I first took the first trade. So I might actually wait an extra day, and that might allow me to actually get in down here for my second trade. So duration between entries, as well as distance between entries and sizing between entries, dollar cost averaging to people who are reckless with it can just be straight up gambling. But dollar cost averaging with a very conservative and risk adverse approach can actually be quite a great way, in my experience, to trade the currency market. So just, there's different styles, different things for everybody, but we'll have to see. Also, James, we've got just about 3 minutes here, so I'm going to stick around for just a few more minutes. Got 2.5 minutes before services PMIs. You and I have actually done this a couple times now, but
Yep.
PMIs pretty key to determining the state of the U.S. economy. And as I mentioned every time, the services component of the U.S. economy is a very large part. Now, manufacturing numbers came in for PMI numbers last week. They came in better than expected. Services, we're going to see if they can match that same energy. Can we get the same kind of results, same kind of outperformance or better than expected numbers for services PMIs? I'm going to switch over just so we can react to this together. We've got all markets here, or a bunch of the core ones. You've got the stock markets over here. So Russell, NASDAQ, SPX, US 30. And then you've got the dollar index here, gold here, Bitcoin here, oil here. So we'll keep an eye on all of that. And we've got about 1.5 minutes. So we'll see. Also, so quick question before we get there, James. Does services PMI, does that weigh into your decision-making process at all with the euro dollar positioning?
Not immediately. If we start seeing a decline in, whatever data point or an increase in data points, I'll account for it. But overall, a general news release won't sway my overall direction on the market.
Sure.
But yeah, I mean, in terms of trading in this situation, if we get spiked to the upside, I'll likely go short for a very short-term mean reversion. But yeah, we'll have to see.
Yeah, and sure, that would be, perhaps like a big miss in services PMIs would actually create some dollar weakness, and maybe there's some bigger moves that move higher on the euro dollar, in which case you might be able to get some better entries, etc. So, but I tend to agree. One singular data point doesn't dictate. For me, it's straight up the scoring mechanism that we use. One of these is not going to completely change it, but it has the potential to possibly tilt the bias that I have. So anyways, we've got just about 20 seconds to go here. We'll go ahead and roll our quick breaking news. Okay, about 10 seconds to go, guys. We'll see what the services PMI number comes in at. See if it causes any bigger disturbances. Okay, number just came out. Dollar index slightly higher here. Let's see what that number came out to be.
Yeah, I've not got a reading yet.
We've also got JOLTS job openings as well. So both of these are key. One is, economic outlook. Their services PMI came in better than expected, 54.1. Nice to see it. Now we're waiting to see JOLTS job openings, expecting 7.73 million jobs added.
So initially bullish dollar, services positive news.
Yep. And we also had a beat in JOLTS.
Oh, nice.
8.1. So pretty strong. Should be a strong reaction from the dollar, and there it is. And a bit of a mixed response here from other places. Of course, gold not going to love a stronger dollar here today. Dollar index moving higher off of this. Russell lower, NAS lower, SPX lower, US 30 lower. Might be a little confusing on the surface, but the stock market's like really curious about how many rate cuts we're going to get this year. So just really strong economic data can sometimes scare, especially the rate sensitive parts of the market like the Russell. So we'll have to see where that goes. To be honest, I wouldn't take that as a big bearish catalyst for stocks, though maybe just giving back a little bit of those gains. Dollar Swiss continuing to push higher, which is not too bad. Not too bad for both of our positions, James.
Yeah, no, good stuff. That leads me on to one of my questions for you, actually, is what are you expecting from the Fed this month? Because it seems like we're going to get a hold, but do you have a different opinion?
No, I think a hold is a pretty fair basis, just because, again, we've had a couple months of uptick in inflation, and we have probably a good excuse for them to just wait and see what happens with Trump in his first couple weeks as president. What kind of things does he get set into motion? I think that the Fed is going to wait before making any decisions in January. So we'll see if that's right. Maybe they'll surprise us, but something to definitely keep an eye on. We've got meeting minutes tomorrow, so could be an exciting day tomorrow if you get any sort of surprises on that side.
Yeah, no, I completely agree. I think, we'll likely see a hold. I wouldn't suggest there's any changes there.
Yeah, no, really going to be an interesting first couple weeks here of Trump. We've got, of course, NFP this Friday, so lots of potential energy stoked for this market as we go into the rest of the week. James, I'm going to give you the kind of throne here. You could do your own thing, whatever you'd like to go through.
Sure.
Of course, before I step out, let me just remind everybody who's watching, guys, if you'd like to see more from Forex James, you can find him on his own YouTube channel, Forex James. Also, his website is elitetraders.io if you'd like to check out what he has available over there. All right, James, nice talking to you, and enjoy taking over the show.
Thank you. See you later, Nick.
See you, man.
So, guys, how is everyone doing? Start of the year, we're now 1 week in, officially into 2025. I'll do a portfolio update since I didn't do it at the start. I like to do this normally when I come on, just so any new viewers know what's going on and who I am. So yeah, this year started pretty strong, up almost 7%. So averaging just under 1% a day for 2025, which, to be honest, I would say is pretty good. Yeah, no changes though. I have requested another withdrawal from my account though. So again, anyone that keeps up with me on my personal social media will know I withdrew around 23,000 from this account. I've gone ahead and requested another $5,000 withdrawal, and that's to fund my Robin's account. So I'm entering the Trading World Cup for 2025. I've already got my account. It's all ready. I just need to wait for my withdrawal from this account to put into Robin's, and then I'll officially be in that World Cup. So that will be nice. Aiming for top 3. We'll see how it goes. Obviously, I've got a lot going on this year. I'm moving to likely Asia, so I'll have a lot of focus in different places in my personal life. But as long as I can keep performing the way I have, I think at least top 3 is more than doable. My RSI is a length of 6, upper band of 80, and a lower band of 20. So yeah, length of 6, 80, 20. Middle doesn't really matter. I don't use the middle, but 50. It's good for finding the extremes in the market, really. So the 14 RSI, which is the standard one, is pretty rough. It doesn't really give you accurate pullbacks, in my opinion. Whereas my settings are a little bit better for finding sort of mean reversions or pullbacks and things. So, as I was saying with Nick, there's not much change in my opinion, to be honest. So last quarter, so I'd say Q4 24, pretty much sat towards dollar bullish and euro bear. That's not changed. I'm still looking for 110 on the US dollar. Obviously, we'll have to see how data develops and how things with Trump go. But generally speaking, I think we're pretty set. We're not far away now. If we look on the quarterly chart, which is the 3-month chart, it also looks very promising to continue to the upside, just based on the ascending channel that we've got here. So this was formed sort of 2009 to 2011, depends where you want to draw it from. But since then, we've been trending to the upside, following this channel pretty accurately here. So if we're looking really for the channel to be respected as you would expect one to be respected, we could at least see these previous highs up here get touched around 113 to 114. And then, if we continue to see positive data, it wouldn't be a shock if we come to sort of the top of this ascending line around 120. 120. Of course, those are big targets. This is a 3-month time frame, so it might not happen within the next week, 2 weeks, 3 weeks, but it's worth paying attention to. Obviously, technical levels are, especially large time frame technical levels, are still very relevant. What part of Asia? Likely South Korea. My girlfriend is going to teach English over there. So I'm currently trying to work out what I need to do in terms of visas to be able to go, because it's a little bit tricky with visas. And this is where my personal finances are kind of biting me a little bit, because I don't keep cash. I don't have any money in my bank accounts other than what I need for bills, food, and basically that's it. Everything I have goes into investments, trading, or well, that's it, investments and trading. So yeah, a lot of visas. So for example, the Thailand visa I was looking at, you need to have about 10K in your bank account, which isn't a problem. It's just, I'm going to have to liquidate some of my investments, which I really don't want to do. So currently weighing up my options and what the best approach is here. Surge, no, I'm not in any trades right now. I was in euro dollar, and I could have held it in theory, but better safe than sorry. I'm quite happy to grab profits, get out, and that's me done. I'm probably not going to trade for the rest of the day. The dollar's already moved up. The euro dollar needs to pull back now for me to be interested in going short. So yeah, probably nothing going on now in my place. Lola, in the same way, just moved X amount of my credit card and bills and flushed out. Yeah, that's exactly it. I don't really see any reason to have cash. It's kind of irrelevant, in my opinion. Obviously, it's on an individual basis. Going to move to Bali. Yeah, I'm also considering Bali. I've got a few options. My friend Dan Emerson, I'm not sure if he's been on this channel before, but he's in sort of the same community as a fundamental swing trader, as far as I'm aware. But he's built some properties in Bali. He's invited me to go over there, but it depends when they're finished. They do have digital nomad as well. The problem with digital nomad, that's not as easy as it sounds, because you've got to have quite high requirements for certain places. You went long on the pound. Hit stop loss before news. Unfortunate. Don't bet against the dollar. I've been saying this since November. Buy dollar, buy dollar. I'm from Thailand, James. Would welcome you here. Good stuff. I appreciate that. Well, if there is any Thailand guys and I do move there, we'll go out for a drink. We could do a little trader meetup. That'd be nice. Assad, happy new year to you. Anwin, you're in New Zealand yen. Okay, let's have a look at New Zealand yen. I'll be honest, I have no idea what's going on with the yen pairs. I said it on the last time I was on that I'm completely done with the yen. It's not my friend. I don't like it. So I'm not trading it for the rest of the year. So I haven't even checked the yen charts or the yen crosses. And the reason is because the MOF sorry, not the MOF, the Bank of Japan, BOJ, they're not giving me enough source to be interested. It's just there's no juice from them, to be honest. I like to have some sort of an idea of what's going on. With the yen, I just don't, so it's not my friend. Based on technicals, though, it looks pretty solid. If we look at the yen index, it also seems like we are heading back down to the initial intervention level at 62. Yeah, around 62. So path of least resistance, I guess, is to the downside on the yen. So I would look towards buying. Actually, if you want to go on the yen, I'd say dollar yen is possibly the best one. But then that arises another issue, in my opinion. 160 is now the new hot topic in bank reports and by institutions as the next danger zone. So for anyone that was trading sort of the June to August period this year, or last year even, will know during this whole move to the upside, all we kept hearing about was be careful, this level intervention, danger, action level. And then we kept hearing that 150, 155, then 160. And then we eventually got it and we had this huge melt to the downside. Now they're saying the same thing about 160 again, which we are approaching. So if 160 is relevant and we do get an intervention there, just be, obviously be on your toes, ready to cut positions, risk-free, trail stops, all that good stuff. Come to Singapore? No, absolutely not Singapore. Moving to Asia to capitalize on the low cost of living. Singapore, as far as I'm aware, is pretty expensive, on par, if not higher than the UK. You have to be liquid on both trading accounts and bank accounts. I trade, so I call cap on what you're saying. Me? I don't know what you're referring to. Volstag? Let me know what you're talking about, and I may have misspoke or misunderstood something. Yen gave good moves last year. It did give very good moves last year, as long as you weren't stuck in buys like I was. Short EuroCAD. I think that's probably a pretty decent idea considering oil. In fact, I'm not sure. Has oil been doing okay? Yeah. Oil's performing quite well. I'm just a little bit concerned where the price currently is with the 200-day moving average here, weekly moving average here. There's just quite a significant dynamic resistance here for price to break through. The hourly's looking a little bit like it wants to pull back here. Generally speaking, though, oil's performing well, obviously reflecting quite well on the Canadian dollar. So EuroCAD shorts make sense with the euro pretty much in the bin. Took the first trade of the year, short Euro USD this morning. Hopefully it will give me a good start to the year. Great stuff. Yeah, Euro dollar shorts have been my bread and butter for the past couple of weeks. Sean, you love Singapore. I've never been to Singapore. It looks beautiful. I'd definitely visit, but I'm not sure about moving though. Yeah, 160 is definitely looming. Just reading the chat here, sorry. Give me a second. The carry trade unwind paid my last vacation. Well, you're welcome, Marcus, because I lost a lot of money in that unwind, so give me credit for that. Need them to intervene a little quicker. Euro yen has been dog walking me. Yeah, I think they will. But there is no way to time interventions. Unfortunately, if we could, I think we'd all be super rich. But you can kind of gauge it because the MOF doesn't just intervene normally out of nowhere. Generally speaking, it lines up with a bank holiday or a US news release. And obviously, when we start seeing the yen get very undervalued or very devalued from previous levels, it's also quite a good indicator that they're going to intervene. Like we saw here, we saw a really strong move to the downside, intervention, strong move to the downside. This was, I think, just short-term buy. I don't think that was anything too relevant. But if we continue to slide to the downside, likely we'll see another intervention here. So, yeah. Singapore, you don't pay any taxes made from trading. Oh, interesting. I've never really looked into Singapore in terms of capital gains. I've just heard stories about high costs of living and stuff, so I've never really considered it, but maybe. Move to Africa? Maybe. Probably not, though. I've seen the internet conditions there. I need good Wi-Fi. It's a priority. Seeing as I'm a young money Wi-Fi kid. No, I'm joking. What trades are you currently in? James, I'm flat. I've got no active positions. Dubai, I hate Dubai. I will never do business with someone in Dubai. It's a big red flag to me. That was wise words of one of my close friends. Oh, okay, I guess. Sorry, I'm just... Hey, James, what do you think about NAS? Good question. Let's see. Is there anything on the Edgefinder? Edgefinder isn't really telling me too much. Dollar CAD, I really like dollar CAD. Oil is interesting. I've got no opinion on oil. Don't trade dollars. Oh, NASDAQ is here. I was being blind. So actually, based on that, I'm quite happy to say buys are a good go. So if we look price levels, daily looks strong. The weekly... Oh, wait, that's the daily. This is... Oh, wait, hold on. I'm on the wrong chart. Still my currencies. My bad. NASDAQ here. Right, now we're on track. Yeah, the weekly's not convincing. The daily, I don't like this downside movement, but I think we could potentially get some good buys in, actually. Just depends where. We've got a nice double bottom, potential triple bottom here to buy from. Beyond that, nice level of support through here. Yeah, I think it's a good decision to go long. It's just it's a little bit iffy where price currently is after rejecting this trend line for the third time. So be careful. But yeah, I think the idea is pretty good. Trump going to speak in about 45 minutes. Is he? I had no idea about that. I should probably pay attention. Should I be long US 30? LHTML. I don't know. Should you? What makes you ask that? I think I'm really behind here on the chat, so I apologize. Been watching it for a few hours. Now too long. I think Edgefinder's positive. Yeah, okay. Kenya has the best Wi-Fi and good weather. Oh, interesting. Okay. Maybe. Again, Africa's not somewhere I've ever considered moving to, but I'd definitely like to visit. James, would you recommend going for swap-free accounts for swing trades? Then spreads are not good, but is it worth it in your opinion? I wouldn't say so. Well, actually, I don't know, because it's a payoff. You swap free, but again, like you said, you're getting higher spreads. You might get worse trading conditions, generally speaking. So to be honest, I wouldn't. Spreads are actually not as huge as people think. It's not a case of, oh, I've got a spread account, it's going to ruin my profits, because always just go on carry trade scanner and just check, am I going to be paying a huge amount for this trade, or am I going to get paid? And if you are planning a trade that's going to last 2 weeks, 3 weeks, 4 weeks longer, then just make sure you're buying an asset that is going to pay you to hold. So just make sure you're integrating the swaps into your analysis and into your trade plan. You think that NAS is forming bullish flag? I know. I think that's how you say your name. I don't trade patterns and things. I think you could argue that. I'm not really sure how you would really... I suppose you would do something like this, maybe. But in my opinion, this looks a little bit forced. I think this support here makes a lot more sense than trying to draw this. But yeah, I think, to be honest, actually, we will likely see a bullish move from here. So we've got the 200 moving average H1 time frame. This news was obviously caused by the US dollar, or the US news we just had. The RSI is about to become oversold, so likely we'll see some sort of correction here. It might not be a full correction, but we might see some bullish activity from there. But overall, it looks likely we'll head a little bit further down until coming back up. Okay, cheers. Withdrawals go quick. I don't know if that message was to me. Do you trade based on CFTC COT reports? Swing trading, yes, but not for my DCA trades. DCA generally is just the overarching macros and just basic technical levels, and that's it. But if I'm going in for a swing trade with a stop loss take profit, then yeah, I'll try to account for everything I can. So retail positioning, COT reports, macro trends, those types of things. I've been holding GBP on my account, but it's down a lot against the dollar in the past few months. Would you stay in GBP or switch it? I wouldn't, to be honest. I don't know. I'm just trying to think. Actually, you know what? Yeah, switch. Or I would switch. Actually, this isn't financial advice. I can't do that. I would switch because I think the UK is in a very bad place, and I think it's only going to get worse. But the deterioration I'm expecting isn't going to be a case of it just drops. It's going to be a very slow, very continuous move to the downside. If you guys want to know a little bit more, I'd suggest watching a guy called Gary's Economics on YouTube. He is a ex-city trader in London. He breaks down the UK economy very, very well. He's actually the one that made me realize how bad the UK actually is. But the problem is, I can't really do anything about it in terms of trading, so I'm kind of just waiting. Do you think the dollar is too high? No. Nothing is ever too high, too low. Look up something called the efficient market theory. That will explain what I mean by that. But essentially, the theory is that markets are always priced correctly. Would it be better to wait for setups after NFP? Depends. You swing trading, day trading, scalping. It really depends on quite a few factors, really. Why not Dubai? I just don't like Dubai. Think about the amount of people that you see on social media in Dubai, and how many of those people do you think are real traders or real businessmen with real track records? I just don't trust those Dubai guys. I'm not saying everyone in Dubai is a bad person. That is absolutely not what I'm saying. I'm just saying I will never do business with someone because it seems like the place where the majority of those dodgy people seem to go. Obviously from other countries. Please don't misconstrue that.
Hey, James.
Hey, Chandler.
I'm here to set you free.
Oh, sure. Okay, cool.
Guys, I've been putting I put Forex James's YouTube channel in the chat, and also he's got his own site where he has his own services and things and such. And there it is. All you got to do is click the link. I've done most of the work for you in terms of finding it. So,
Cool.
James, thanks
Thank
for
you.
coming on, and we'll see you next time.
Cool. Thanks, guys. See you later. Have a good day.
All right. And guys, we're going to run a quick break, and then we're going to be joined by Chris Pulver right after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Tuesday. Welcome back. Taking a look at NVIDIA, which seems so promising. I had this comment here. This was December 10th. I said, my proclamation is NVIDIA hits the 200 EMA before it hits the all-time highs. Well, I was wrong, but as it came back to all-time highs, I did say, don't be surprised to see it fake out, and it did. So today's a pretty nasty candle on NVIDIA. The heat map is Nvidia down, Broadcom down, Tesla down, Amazon down, Eli Lilly is positive, Meta's down, Netflix down. Let's jump in here and take a look. So that's a pretty good sell-off in the semiconductor space for two of the big ones, AVGO, which saw over $1 trillion, Nvidia, one of the top 3 in the world. Meta's down, Amazon down, Apple's flat, Microsoft flat. We're going to take a look at that one. Look at the tech space. Oracle down, Palantir down 5% today. Finally getting some pullbacks on Palantir. That makes me kind of interested. I want to see maybe a ratio spread on there. Okay. Palo Alto down 2.74. I'm going to take a look at Palantir. I might look at, is it good? Is it a great stock? Is it a great stock? We'll find out. Tesla down 3.09%, back down in the 400s. Nvidia, I missed the, the bear call spread. So I still own the shares. I did a roll. I've got a trade that I posted this morning on UNG. This is in the Pulver Alert section. So I put in a trade. This is a calendar or a diagonal spread. I bought the January 2027. So obviously not time sensitive. I bought the $5 call. This would be, it's an income trade out to April because I'm looking to see if price will get above $23 by expiration in April. If it's below $23, then I continue to sell against it. And my goal is to lower this as much as I can. So right now I paid $11.25. I just did one contract for my accounts, and so my max risk is $11.25. If I continue to sell calls against this every maybe 40 to 60 days, I lower my cost by about, let's say, 50 cents or so. And so if I can get for this year, I'll just say this year, I go out all through 2025, all through 2026. If I get like another, let's say, $2 of lower costs, okay, $2 of lower cost brings my debit down to $9.25 roughly. And let's say that I want to stick around the same profit target. Well, if I go from a cost basis of $11.25 to get it called away at 23, and then I lower it and I lower it and I lower it and I lower it, it just gives me net profit, like more profit potential. So it's a dynamic trade. I'll keep an eye on it. If natural gas just goes up, then this trade gets called away. And as far as the return on risk, I mean, I'm risking $11.25 to make almost $7, which is a pretty good return on risk. If I make $6.75 out of a max risk of $11.25, that's a 60% return on risk in a couple of months. Like, that's pretty good. So it's not a huge position. Natural gas can be a slippery thing, and it's called the widowmaker for a reason because it just can't get any love. But this is the first real push we've had above the 200 moving average in a long time. Like, literally, this bear market started back in November 2022 and has been just vicious. And we have all these natural gas bulls have probably been exhausted. And I'm looking at this like, it's, to me, 2027 is not time sensitive, but to be able to sell against that within like a 2 to 3 month window and hopefully make some profit on it would be the play. So that's one trade that I'm doing. I want to take a look at, let's see, not NVIDIA, because I'm already in NVIDIA. I did a roll on that one. I need to add this in for the tracker here. So I put this in last night. TLT I'm in, Pfizer I'm in, Uber I'm in, and then I got some income trades with some bear traps on ES and SPY. I was going to look at a hedge today on the Qs. We'll talk about that. So UNG, it's the, all right, I'm just going to get this typed up. So 1/15/27 expiration, $5 call, and then the 4/17/25 expiration, $23 sell call. So 11.25 was my fill. Okay. So that, I want to look at Palantir, PLTR. There's still a long ways for this thing to drop. If I'm looking at some ownership prices, I don't mind owning Palantir in the 50s or 40s. And I'm trying to think. Let's go ratio spreads. Let's see what if the Ivy rank has jumped up 84.7. That's pretty decent. We've got earnings in February. Could I get this thing low enough? If I went out to, let's say, March, go out 73 days, look at a ratio spread. If I said I want to own Palantir, I could probably own it in the 50s or lower. If I did the 50 by 49 or the 49 by 48, I look at this level here. So 45 bucks. If I could own this as close to $45 as possible, I'd be okay with that. Let me look at I can do a 111 or some type of like put condor. No, I don't want to put defined risk in. I'm willing to own the shares. So if I did it here at 48, so I collect 93 cents. I can get a little bit more out of that I get $1.09. This isn't too bad for 73 days. I make $100 income. I'm willing to own the shares. My break-even price if I own the shares would be 49 minus $1 and minus the $1.10 credit, because I would get $1 profit on the bear put spread, and then I would get $1.10 on the additional put. And so my break-even price, I didn't think I did that right. So 49 minus $1 and then minus $1.09. So I'd own the shares at 46. Is that right? I guess it is. Yeah, below 47 bucks. That's not bad. If I go to an at the money, let me look at 30 days out for an at the money. So what's an at the money call for 30 days? I mean, you can lower the cost basis pretty aggressively. I don't mind taking shares of Palantir. I think fair market value is in the 40s. So yeah, I'm going to take this trade. All righty. So that would be March 21st. And let's flip this around. So if I buy the 50 put, sell the 49 put, and I sell 2 contracts of the 49, that's a ratio spread. If I can get $1.10 out of this, so the income trade it's $1.10, and that's like an 80. So it shows here 87% probability. You know, the deltas, the assignment delta would be like a 10 delta. So there's about a 10% chance I get assigned the stock, which I'd be okay with. How many shares do I want? Not a ton. I mean, if it's a 46, 47, I mean, it's $4,000 on my cash accounts. So it's a decent chunk to tie up. It's tying up, I don't know, just around 1% or so for a lot of these accounts. But it's income if it doesn't get assigned, and I can keep doing this over and over again. So I don't mind that trade. I also think if I did this is the riskier side, because if Palantir is like going to rip again, like I don't want to put that in the way. I just don't think we're going to all-time highs. I think this stock had like one of the most ridiculous runs of 2024. It was one of the best stocks in the S&P. I think it was the best stock in the S&P, which was probably surprising. And for the life of me, I could not get assigned anything in here. I was doing ratio spreads, credit spreads, and it never pulled back. So I tried to get assigned all the way up here. Just never happened. But I'll take my chances. I could probably get, I mean, 2 ways to trade this, right? I could either do kind of an at the money credit spread and just work this cost basis lower, or I can do a ratio spread at a price that I'm willing to own it and take ownership around $47. And then if I take on ownership, then I will, add a call, add a put, and I'll sell the call and I'll buy the put. So I have a collar trade. If it goes up, I'll generate income. So you're going to see me doing that a lot this year. If I own any stock, I'm going to have collar trades. I know they're boring, but I'm going to make sure that I get some income on the upside and protect the downside just in case things turn south. But for $1.10, now the mid price is trading at 92 cents. I don't love that at all. The difference here, that's crazy. So I can get more credit on this 50 by 49 than I can on this 55 by 50, even though I'd actually own the stock cheaper. This is kind of nuts. I want the income, but I also like to break even. I don't think we're coming back to that point though. So anyway, I'm going to take this trade, hopefully get $1 for it. Can I get $1.05? I'll start with $1.10. All right, let's try this. So $1.10, I might have to lower the cost. I might actually, let's go out one expiration more. April. See if this one works better. 46 by 45. There, that's a little bit better. So a 47 by 46, now I get a little bit more income. Do I get more if I go here? $1.47, a little bit more income. Still would own it at a similar spot, get assigned at the 48. So assigned at 48 minus $1 minus $1.49. I take a break even at 45.51. A little bit happier with that. See, you might get $1.50 out of this one. All right, let's try this guy. So here, $1.50 is not filling. Let's go down to $1.49. I'll finesse this for a couple of cents, maybe $1.45. All right, try to go $1.45 right at the mid price. Not filling. Come on, spreads. $1.44. Kind of $1.40 is going to be my final offer. Let's find out. All right, I got filled at $1.41. Okay, so everyone's getting some love on Palantir. Filled at $1.41. Moving through the accounts now. Getting filled, no problem. Okay, good. Looks like $1.41 is pretty consistent. I'll take that trade. Okay, pending at $1.41, maybe $1.40. Getting filled at $1.40. Okay, fine. Come on. Don't make me beg. $1.40. $1.39. All right. Getting filled there. And getting filled for the $1.41. There we go. And last account. All right, so $1.40, $1.41 getting filled. That's going to go into Pulver Alerts. I'm in the trade, adding to the tracker. This is PLTR and April 17 expiration. I am buying the 49 put and I'm selling the 48 put with 2 contracts. So that's a Palantir ratio spread. Willing to own the shares. I just want to own it at a price that I'm happy with. So $1.41 credit. And the break-even price would be assigned, if price falls, assigned at 48 minus $1 on the bear put spread and minus $1.41 on the credit from the ratio spread. So 45.59 would be my break-even price. So that can go under my stocks options, new trade, PLTR. Then I went out to April, 4/17 expiration. Buy 1 put at 49. Sell 2 put at 48. $1.41 credit. 10% chance of assignment. So this is an income play first and foremost. but I'm willing to own Palantir. If assigned, break even is 45.59. Okay, so that trade is in, and I'm posting this in the Pulver Alerts Discord right now. So buy the 49 put, sell the 48 put for $1.41 credit. And there we go. Past resistance becoming support. Hopefully, I mean, likelihood of assignment's pretty slim, but you never know. So if I get assigned, so be it. And I'll own it and figure out what to do with it. But if, otherwise, just collect the income, and that's fine too. Okay, so getting that posted, screenshots in, send everybody. Thumbs up. Also took that trade on UNG I talked about. That was posted. I posted that under the commodities trades in my channel. So if you're in the Chris Pulver alerts, you've got Trading Journal, index trades, commodity trades. I posted UNG and commodity trades. Yesterday, I added trades in for TLT, which technically is a bond, but I put in TLT for a diagonal spread. New trade today in Palantir, Pfizer, Uber, Coin. That trade's still in. Yep, I took that trade. Okay, XLC, income trade, MA and V. Those are closed out for profit. MicroStrategy, working that thing down. All right, let's have a look at everything else. Top down. So we're down. I'm looking at a little hedge action today. I think the Qs are maybe better postured for a hedge play. We're already down 1.4%. Son of a gun. I don't know. We're either going to get a lot of crazy direction. We still have non-farm on Friday. You know, is this market going to be, change the color. Is this market going to be flushing lower where we actually like break the PCE low? Is this a, correction that's going to get underway where price is like very volatile? Maybe, right? This is a little bit more of an orderly move to kind of buy at a discount as opposed to, I think what everyone gets concerned about is like, does this market just freaking dump? I have no idea, right? I mean, we've got inauguration on the 20th, non-farm CPI, PPI next week. No major Fed decisions until probably June this year. I looked at this yesterday during my 3 p.m. Final hour session. What I see from the Fed is pause through January, pause through March, still a probable pause in May, and then June would be that potential rate cut. Okay, and now I think I took a screenshot of this. There is a potential that the market's actually pricing in a freaking rate hike. I don't see it right now. Like everything looks like they're just kind of pricing in at some point between June and September a 25 basis points cut, but I don't see a hike on the table as far as the probabilities, right? I mean, do you see any of this? So to show a hike as far as the futures tool or the Fed tool, we'd have to see a 4.50 to 4.75. We'd have to see a histogram popping up here somewhere on the radar, and it's nowhere to be found. Right? So even through January, there's nothing higher than a pause. Through March, nothing higher than a pause. May, nothing higher than a pause. Nothing higher than a pause. Maybe a cut. So I don't see anything that shows the rate hike scenario this year, at least from the Fed Watch tool. Not yet. Now this obviously can change. Who knows? We go to probabilities here. Looks like the first cut would be coming in June. That's where the probabilities are sitting right here. So pause all the way through May, which is kind of the first half of the year, right? First half of the year would be zero action out of the Fed, and hopefully the market kind of, whether the steering wheel is shaky or not, we'll see if we can still navigate this soft landing, no landing scenario. The Fed pivoted pretty hard in December though, and I don't see any hikes on the table, but once we cut it's interesting. Like the probability right now is if there's one cut, that's showing one cut for the rest of the year. Now, all these are subject to change, but the Fed, as in December, 1 to 2 cuts for next year. And this is showing about one cut on the table. Okay. So anyway, interesting stuff out of the Fed. Did things get worse before they get better? I said one of the easier things to do as a bull would be to actually have the opportunity to, buy the lows. I had some good hedges over the holidays. It worked out really, really nicely. I think if we came back up, I think I'd take something that, Nick and Frank and I talked about yesterday, which is if we come back up towards the all-time highs, maybe looking at some hedge plays in there, as opposed to throwing one in now that's already down, 1.5%, 1.4%. It's like I kind of already missed some of the move. So if we keep bouncing around in here, and maybe this market is just going to chop around, right? There's still a lot of indecision, uncertainty. It's like, what does Trump lead with? This is kind of the big surprise in 2016 is, we led the campaign with, we're going to fix DC, we're going to drain the swamp, and everyone's needing something different. We need change and make America great again. And what do we lead with? Tariffs and deportations. So it's like and then we reverse Roe v. Wade. So, I mean, I don't know if we're going to lead with like the social side of things, or we're going to lead with the financial side of things. If we lead with a trade war, well, that's probably not good either, So, I don't know. I just expect 2025 to be like a bumpy ride. And I'm looking at, there's some stocks I'm interested in. Palantir, I got the ratio spread on. I want to look at like an AVGO. I mean, part of me it's hard to fade, what has now become like a Mag 8 scenario, Fantastic 8, whatever the hell they're going to call it for 2025. But it's hard to fade this move, but man, it also seems like, is it fair value? Let's find out. So AVGO, profit margins lower, insider selling, probably at those highs, or earnings forecast to grow, price to earnings. I mean, that's insane. This doesn't mean anything for like tech stocks. It's like people pay, 200, 300. It's not really like, it's certainly not undervalued. I'll say that. Against its peers, this is what I don't love though, right? I mean, if I want to establish a position in AVGO, I mean, we're $80 overpriced, $70 overpriced based on a discounted cash flow model, and based on its peers. NVIDIA is at 32.3 times price to sales. Peer average 14.2. Let's see, Qualcomm. Where is Broadcom? 21.5. So it's a little bit more than the peer average, but you've got AMD in here, which is still considered, I suppose, price to sales wise, like not a terrible multiple. It's still up there. Qualcomm, not bad. But anyway, price wise, I mean, I was looking at what would this be if I took a trade on it right now? How much risk would I have? If I can get like asymmetry out of this trade, I might take it. If I went out, let's say the next, I don't know, do we have a flush? The timing is hard on this one. If I went out to the end of the month and just said, look, Semiconductor is going to have a rough start. Yes, no, maybe. We got $5 wide spreads. I don't love that. If I buy the 225 and sell the 220, I risk $2 to make 295 or 205 to make 295. Like, that's not a bad trade, but I need price to stay below 220. Okay. If I go a little bit wider, I risk 368 to make 632. It's not a bad trade. I risk 495 to make $1,000. Not a bad trade again. But how much lower does this actually go? Is this a gap up and this is just a lot of indecision? Is the IV just going to drain? Is it better to be a seller here as opposed to going directional? Maybe we don't get a gap fill. I learned the hard way, like, NVIDIA just found a way to keep going higher. So anyway, all I'm saying is it's a potential trade, but I'd like to sell this one more if we had like a pushback to the highs and then look at a trade back down, as opposed to we're already starting to see a move today. It's down, 3.5%. It's like I'm kind of missing it. So I think an equal high would have been better. You know, Nvidia at the same highs at 150, 151 would have been a lot better than now when it's down a few percent. And is this a stock I want to own? Not really. You know, not, I mean, unless it was like putting like $1,000 to $2,000 of fractional shares in it, maybe. But if I wanted to own AVGO, I mean, I might as well just trade SMH. You know, just own like more exposure in the semiconductor space. What's the other one? SOX. So there's the other one. So between SOX and SMH, I mean, what's the exposure? What's the weighting? X weighting. Let's find out how this is weighted. Not market cap weighting, fund and price. Let's go semiconductors. Come on, Bing. Pricing and performance. I want to see what this holding includes. There we go. So you got AMD, you got Broadcom, NVIDIA, Qualcomm, Micron, Intel, like some of these, I mean, household names, right? Semiconductors, 79.18, and the materials and equipment, 21%. So between SOXX and SMH, I'm going to look at the holdings on SMH and do a little comparison. SMH holdings. I mean, that's all NVIDIA. So you got Taiwan Semi and NVIDIA for 31%. So I'd say as far as diversification goes, this one might be a little bit better. If you're interested in a bit more diversification, even though it's still heavy semiconductors, it's way lower. Like NVIDIA is only 8% versus SMH is 20%. Like that's all NVIDIA. But NVIDIA is probably one of the most single like important stocks in the markets right now. It's, you know, top 3. It has a great head start. It's been one of the greatest assets the last 20 years. So I kind of like this one for having materials and equipment and semiconductors as opposed to just the companies themselves. So we've got, that's it. Like it's all. Are there any equipment things in here? Maybe. Anyway, food for thought. If they were cheaper, it's like $227 a share. Not super awesome. So it's not really something I want to say I love doing some trades on it. But question is, could I do a ratio spread? Could I generate some income? Could I have a high probability trade? Let's find out. Let's go SOXX versus SMH. So we're trading an 18.9. We only have monthly expiration, so I don't love that. Let's go SMH. Now we have better option chains. We're trading at 26.5 IV. This one obviously is a little bit more concentrated in NVIDIA. But if I went out like 45 days, that's February 21st. Out of the money puts. So the lows here back in August 5th are on the 190s. Could I do an income trade in the 190s? 200 by 195. It's probably not going to give me enough credit. Nope, that's not enough credit for me to justify that trade. If I just sold a put, not that interested because I have zero protection on that. Could I do a 1-1-1 trade? Maybe. If I put in a trap here, let's go 210. If I buy the 210, sell the 205, and nope, like credit, I don't know. I don't love that trade. Son of a bee. It's almost better if I did, I mean, NVIDIA, honestly, like I might just do a 1-1-1 on NVIDIA. I still have shares. I'm working the cost basis. I have shares down to about 132 right now. But could I do through earnings? Choices. Maybe a ratio spread. Let's go out to April. Premiums are pretty solid, and I like that a lot. If I wanted to own NVIDIA, which I'm happy to, I think I could repair the stock pretty easily. If I could own NVIDIA at 120 or less, I think that's pretty simple on a ratio spread here. So if I did like a 115 by 110 or a 1, even that's not bad. Sell the 110 times 2. That's a good income trade right there. There's only about a 14% chance of assignment. If I could collect over $2 on this trade, $1.70, that's not bad. 225, the 115 by 110, my break-even price if I did take assignment, 110 assignment minus 5 minus 2.25. I'd own NVIDIA at $102.75. Okay. Again, if I took the assignment, own it at 102, we're coming back to August 5th of last year's discount level. It's in the 90s, but it's like I could probably repair that trade pretty easily. At a collar rate if price just goes up. If price is like, yeah, NVIDIA just keeps making higher highs and it grinds to this like rising wedge, well, I'll just make income. And I'm fine with income for right now. So traders got to trade. 225, maybe 220 to 225 would be my fill. I'm going to take this trade. So it ties up. Let me see how much capital this ties up. If I take this ratio spread, margin accounts, so 2,500 on margin, only 450 on a portfolio margin. On an IRA account, about 11 grand. So I'm going to take this on just my margin accounts. Let's see here. Yeah, so I'll take this on margin, portfolio margin, 25.65. That's not bad. Okay, 115 by 110 ratio spread, 225 fill. Let's see if we can get it. 226 fill, easy peasy. Okay, that account filled for 225. $225. Good. And that's a cash account. That we can handle it. 9072. No, I don't want to take. That's 10 grand. 9072, I think, is a IRA account. Yep, I'm not going to take that one. And then 16. That one should be fine. So mid price is 230. Come on. 224. Filled. And last account here. All right, filled at 224. All right, new trade. Getting this one added in. This is a trade on NVIDIA, which I already have some shares of. I'm going to hopefully repair that for some income. This is going to be a ratio spread. And okay. There we go. And that is a what? April 17, 25 expiration. Buy the 115 put and sell the 110 put. 2.24 credit on the low side. Willing to own. And that break-even price would be assigned at 110, which is only about an 14% chance of assignment. So it's an income trade first, but if I own the shares, I get assigned at 110 minus 5 minus 2.24. I'd own the shares at 102.76. I'd be happy to own NVIDIA at 102.76. And is NVIDIA forever stock for me? Of course not. It's an income trade for me. So there's NVIDIA. Looks pretty darn good. We know it's expensive. Price to earnings, price to sales. We know it's expensive. But when fair value is at 101.72 based on a discounted cash flow model and I'm owning it at 102, we'll see what people are willing to pay for it. But as long as I have protection and I can work this thing for like $5 or $10 a share, it's income, it's income, it's income. I'll do that a lot. Okay. So proclamation, that was wrong. We did hit the all-time highs, but I did say that if we do tap those all-time highs, expect a fake out, and that's exactly what happened today. ran right up here, and then boom, big old dump. But I have my shares of NVIDIA right here. So I had the shares. There's my collar trade. I get it called away at 140, or I have a protection play at 130. Then I have the ratio spread I just put on, and very wide, but also like I'll take the ownership at $75 if I get assigned out to June this year. So I'll get that trade also posted in my pulver alerts. Stock options, new trade. NVIDIA. Okay, so that's a 417 expiration. Sell the 110 put. 2.24 credit. Income play first. About a 14% chance of assignment. Willing to own if price is less than 110 by expiration. Break-even price is what? 102.76. Okay, so that's in. All right, corrective symmetry, I'll get rid of that one, add in the ratio spread, 417 expiration, buy the 115, sell the 110, 2.24 credit. All right, screenshot, and then let's do some top down. I'll look for some trades on my own and get some more stuff added into the pulver alerts, but I'll just do a portfolio comb. There we go. That's posted. Okay, let's do some top down here. So markets are still clinging to green on the week. I go back to our indexes here. I said this yesterday. Watch the chop inside the FOMC breakdown, the PCE low, the holiday low here, right? I mean, we had a bit of a Santa rally that was given back. The Santa rally didn't show up in 2024, finished on a negative note. Yesterday's pop up here got the market all excited for a second, but I thought if we can't take out this FOMC candle or get above that holiday high, watch out. So I think we're going to deal with this. I think we're dealing with some chop, right? I would like, and I don't know if this is going to be good and everyone's going to hate it, but I would like the market to fall to make me a happier bear, to be more opportunistic. If the market gives us opportunities to buy low, I'm way happier establishing long positions. Until then, I think we're just going to deal with a lot of indecision and volatility. Maybe the catalyst over the next couple of weeks, we have non-farm on Friday. We have PPI next week and CPI next week. The Fed isn't going to be a really event until probably May or June, when they start getting more vocal about the timing of a rate cut or doing nothing at all. Obviously, there's still going to be like press conferences. There's going to be a pause, but take the Fed out of the equation. I think that inflation might be more the front and center story of like what news matters. Job numbers, Frank and Nick and I talked about it yesterday. I don't know if the job number is going to be awesome this year. I wouldn't be surprised if unemployment ticks higher. I wouldn't be surprised if inflation, if we look at the 10-year yield and it's going higher, that's not a good thing either. So very quickly, 10-year yield is up 1.36%. Like, I'm telling you, man, these bond vigilantes are taking this thing higher. This is driving the long-term bond prices lower. So 2025, I would make a bit of a forecast that we might see a severe break in the bond market before we put in a bottom, which is also why this trade I took yesterday on TLT, I'm willing to take the risk. Okay. I am willing to, go out into 2027. It's like I'm giving myself this year and next year to say, I think the bond market at some point finds a bottom. And I don't want it to be necessarily time sensitive, right? It's enough of a debit where it's like, okay, I've got a 1% risk for something I could generate maybe a 0.5 to 1% gain. But the more time I have to lower this cost basis, the better it looks for a net gain. And all I'm looking for is if TLT, for example, finds equal support here in the low 80s and rips back up to the hundreds, well, that's fine. That's easy income. But I think the bond market ends up making a bigger play than I think maybe traders are ready for. This is still a very painful rally that's going to make everything sucky. And it doesn't feel like it yet. And the stock market's sitting just near all-time highs at 2, 3, 4% off all-time highs. But I don't know how this market gets better. The bond market yields. I don't know how we get back to 5% or greater than 5%, and we don't see a ton of pain in the equities market. I don't know how that happens. Anything can happen. But if we get to 5% and start to retreat, the yields follow. If we get above 5%, do we see something break in the bond market and then we see a big reversal in yields because bonds finally bottom out? I don't know. But 2025 is probably going to be a bond play at some point. And so rather than being like, I got to time it perfectly for 2025, I'm just going to go out a couple years, give myself a big, fat, juicy window and try to catch the bottom, And so I'll trade it with defined risk and trade it through options. All right. So S&P, expect some chop. NASDAQ, same thing. Expect some chop. I'll dot these lines out too. So watch for this kind of choppy area for right now. If we can't take out the highs, we can't take out the FOMC and PCE lows, just expect some volatility. The Dow sitting here like, we had a decent correction on the Dow. I'd almost like to see another flush lower. Okay. So if we have like this high to low and a little bit of indecision, I'd almost like to see a flush lower on DIA. And this would be a spot where I'd say I'm more interested in buying the Dow. Right. So maybe I'm picky, but waiting for a 200 EMA, waiting for some nice structure to get tested in here. In the double digit correction zone, if we have like a 9 to 12% correction, I don't know if that's accurate. I think that is. So yeah, if we fell 9 to 12%, I think that window is fair to look to scoop up some DIA. Russell, same idea, like maybe at the 200, maybe this is like high, low. This looks like a bear flag though. Russell, I think, has some more pain before we maybe bottom out. So I like Russell, but not a ton. I would, if I'm going to take any ownership or dollar cost average in, I'd want to do it here in like the 200 zone. That's a spot there. It's one of the cheaper ETFs. I just don't know how much I love Russell 2000 when most of these companies are unprofitable. So I'd rather do like the IWY. This is growth. I'd like to see this one pull back. And this is like, growth centered small cap, which I think would be great for like the AI play. IWX is value, which, that's interchangeable for a long time. But this whole idea of like, I'm just going to buy value. It's like, well, if you buy value that turns out to be like super cheap, I think that's the saying where it's like, I don't know if it's Druckenmiller. He's like, I'd rather be playing in the game when it started versus like waiting for the first pitch or something. I don't know, it's some baseball analogy, but just meaning like there's no reason to be super early. Okay. VIX still trading in the teens, slightly higher elevated VIX versus like the 12 and 13s that we saw last year before we had that big vol event. Middle of the road, like 15, 16, 17 VIX is fine. I'd say adequate volatility, which means fairly reasonable selling premium. But if we're making all-time highs, okay, if we're going all-time highs, then sure, we can probably push the VIX lower, and I want to get long VIX. If we have a bit of a scare coming into the next maybe 30 days, then maybe one or 2 days to the upside, but still, selling VIX is a reverting instrument. I might look at if we have another vol event, and I should have actually scooped it up here on that December 18th move, would be SPXY. I should have bought me some SPXY right there at the FOMC level. That was a good spot. So anyway, I'll keep that in mind for any type of vol event this year. SVIX, similar to that. Oil, dollar index. I still think this is not a trade I want to fight. I keep talking about this on the dollar. I'll wrap up here in about 6 minutes, everybody. So I'm going to power through a couple more charts for us. Dollar index, best case scenario on the dollar is if you are waiting for corrections. The dollar comes back to about 106 or 105.50, then offers buy opportunities to resume, some type of bullish trend. I wouldn't be surprised if the dollar goes higher, right? If 10-year yields go up, bonds go down, I don't know how that's good for the equities market, but the dollar maintains bid through that, possibly. The dollar's had these bouts of indecision. This is not indecision, right? This seems like a very decisive dollar right now. I would say in order for me to get bearish on the dollar, we have to be less than 105.50. If we're less than 105.50, then I'm looking at, okay, sure, maybe this is a range trade. Maybe this is a liquidity play. Maybe this is efficiencies. But I don't think that we're going necessarily below 105.50. I think if we pull back at all, that's a base to then build support. And if we break out above this, we're going long. So I still like dollar long. And I say that because if the dollar long position gets us to 114, 115 on the dollar index, then I will back up the trade and put in like a macro trade here, where I will short the dollar for like 12 to 24 months. But until then, I'm trying to figure out where is the best spot to participate in dollar strength. We had the squeeze here. I participated there initially, and then once we hit these highs, I was out. So I didn't get the extra, I guess the extra chunk of dollar strength when I was just closing out at a high. Okay. So I think dollar strength prevails. Just see how it plays out. But if we're staying above 106 or 105.50, I still look for buying opportunities there. Oil, can we sustain a close above the 200 moving average? That's the question mark. Fake out there, a bit of indecision. But if we have a rally here with a bit of a bull flag, then yeah, this might look like we're heading higher. But don't hold your breath, because something might just snap this thing right back. So I still think this is tough price action right now until it's like open space. I think we've got to be greater than about 76 for me to say I think this oil trade is for real. Now I took some trades in here. I did some bull call spreads and I had some profit in there, but I took a lot of partial profits because I was like, if this thing keeps pestering the floor, I think we break the floor. Now that inflation's gotten stickier, it looks like oil prices are going up. Okay. Futures, nat gas. I'm taking that long position on UNG. Speaking gold, gold, same thing. It's really choppy. I'm looking for gold to come back into the 2,500 to 2,400 zone. Maybe this is just something like that, which I don't really love those patterns, but if it just goes indecisive, I think gold is still well bid. I'm just hoping we have a high, low, lower, high, lower, low. We had a great bull trend. If you have a fifth wave completion, 1, 2, 3, 4, 5, usually an ABC correction is the play. So am I short gold? No, I'm waiting for this ABC correction to be done and then look to scoop up some more gold to resume longs. That's what I'm waiting for. Okay, silver. Silver, I'm way more bullish if we make a poke towards 32 and change, and then we have a run towards 36. Until then, I'm just going to wait. There's really good support at 26, but it's holding really nicely at 29. So kind of a wait and see on silver, but I'm still bullish on it overall for my core position. Bitcoin, nice little run, pulling back. That is a flat pattern, in my opinion, something like this. So a high, low, I was looking for a flat pattern, and it seems like we just had a little bit more volatility, but a flat pattern that ends up coming a little bit lower. So I'm going to see if we come into the 90K. It's going to be 90K to 75K for me. Somewhere in that window, I'm going to start establishing more positions on my peripherals. So that means that MicroStrategy is going to be all over the place today. BITO is down, IBIT is down. MicroStrategy is down almost 8% today. The nice thing is with the roll that I just did in my break even at 288, if I get it called away at 305, I still make, $1,700 on a contract. It's pretty good considering I coulda, shoulda, woulda. It doesn't matter. I took it for an income trade. I'm not looking for crazy price appreciation. I'm just trying to make sure I don't lose anything to the downside and have it get called away for income. So I think I rolled this out to February now. Let me double check that. I think it went to the February. So I own the shares there. There's my collar. There's my collar. Yeah, so 305 by 245 out to February 7th. So if it's greater than 305, I get it called away about $1,700 income, and I will probably reestablish the exact same position again. If I could, let's say I can flip, I don't know, let's say I can flip MicroStrategy for, $1,500, whatever, $1,500, and I could do it 10 times. Well, if I can make 15 grand with just little income trades over and over again, that's pretty good. Do that on, if I do 15K on, I think I have 6 margin accounts. So it's $90,000 on MicroStrategy with nothing but income. It's not bad. That adds up. Okay, but Bitcoin's going to be the main benchmark, right? Ethereum, I might end up looking at taking some profit today. I don't know if the spreads are going to be wide, but I've got a majority of profit in. I've got to wait until next week. So will Ethereum, which is currently sitting on about $9,800 of profit. I know my 45s and 40s are probably safe. It's the $60 put that I'm watching closest. I've got about 80% of the profit right now, and the 45s and 40s I've got about 93 to 94% of the profit right now. I'm not really worried about those. I'll let those go to full expiration, but the $60 put, I might just take it off the table. So this one here, the 60 by 45, that is a ratio spread. Nope, I'm incorrect there. The 60 by 40, it's a wide bull put spread, and this is a wide bull put spread. So right now that's up around $500 or $600. I might just protect that one and then let the other one expire for full profit. Yeah, I'm probably going to close that trade out today for profit and just eliminate the week of volatility that remains and just get rid of it. So that's pretty good for full expiration. This one, it's a little bit more sensitive, but I'm still up about $600. So I'm going to take the profit. All right, I'll close that out. Okay, let's go to a couple of the charts, get some more currencies. Any other requests, type it in. I'll go a few more minutes. Argentina, back to all-time highs. FTSE, super choppy. DAX, interesting pop on the DAX. You know, trying to revisit all-time highs again. I don't know. I mean, trade options. You know, it's like if you got an index here, it's like, what do you do with it? The pulling back to the 50 period didn't really get me that interested. The FTSE, you know, defended these levels. I don't know if I just think maybe the best thing here is right in the middle. If you can sell a strangle on the FTSE somehow or whatever ETF can trade the FTSE, man, it's such a good looking trade if the premium is there. So anyway, Argentina, I just waited for a pullback. I didn't get it. Let me see. Should I trade ARGT? It does have some options, but they're not great, right? I can go out 100 days. Premiums are pretty much trash. We're trading at 89. I mean, I'm just more interested. Like, I do a ratio spread here, but I want to get it in the 70s, and you can see that the premiums are nothing. So it's just not a great trade. If I put it in the 80s, it's like, okay, so I buy the 80 and I sell the 79, and I do it twice, put on a ratio spread. It's an income trade. I've got about a 20% chance of assignment. I don't mind getting the assignment on ARGT. It's a nice diversification. It's, let's see here. I'm curious if it's, it's 0.65 beta. So it's slightly lower than the S&P, but I mean, this thing has just been great. But can I own it? 80 by 79. It's like, that's not really where I don't want to own it there. I mean, I want to own this thing in the low 70s. So I'm almost better off. I just don't get any premium, right? You see how it gets cut off? If I buy the 74, sell the 75, let me check this out. So if I buy the 74, sell this, let's try this one. That's better. Only about a 14% chance of assignment, but I'm not that stoked about tying up. That's a little nuts. Let's try set to closing only. Come on, Dorn. All right. Looks like I can't even take that trade. I could call Tasty and see if they can let me trade that stock or that instrument, or I could just buy it. I don't know. I'll just wait. I guess I can always buy it. I can always close it. Can I buy the stock? Yeah, let me buy the stock. Okay. So I guess that's what I'm going to have to do, which kind of sucks because I want to trade options around it. But I might have to establish a core position first, and then I can do the option situation second. Brazil ETF, I do have some of that. Brazil ETF, that's EWZ. I do have some exposure on that. So I bought this around like $26. We had all these like 2022 support levels. I bought some at 26. The next level I'm looking to add another chunk of shares in would be at the COVID lows. So if we come into like the 21.50s or the $21, $20 zone, I'm going to probably throw some more at it. Okay, Apple back down to 2. Come on, freaking Apple, you a-holes. I was looking for a liquidity hunt this week at 250, and I mean the week's not done, but still annoying so far. Amazon, Google. I did a bunch of trades out to 2025 on Google. That one's pretty busy already. Meta. If we get a pullback, we have a really high bar count on Meta, so I'm looking for either a lot of indecision here, a lot of indecision in order for this EMA to catch up, or an actual correction. Not sure which we're going to get, but I'm not buying all-time highs. Microsoft looks better. I have an income trade there. That is a ratio spread. I have the ratio spread here. Those are income. So that's like $3.20 of income over the next 30 days. I mean, would I take the assignment? Yes, but the probability of assignment, it'd have to come below 375 or below 345, which is way down here. We'd have to make fresh lows below August volatility event. So probably what I'll do in Microsoft is this. I'll do more of it. If we come back down to these levels and look for this support zone, I'll probably just do more. You know, do more like 1-1-1s, do more ratio spreads, and just look to generate income. I don't necessarily want to tie up 100 shares at a $380 stock. I would only do it on my portfolio margin accounts, but still, we'll see. Netflix, same thing on the bar count, pretty high bar count. I'd like to see it pull back a little bit and then establish some long positions. Another, if the IV is high enough, I do some ratio spreads. Probably more 1-1-1s than that one. Nvidia, that's a big fat candle to the downside. We're down 5% on Nvidia today. I say bring it on. I think if this was a fake out, this market might be, more determined to come back to range lows or come back and find this 200 EMA. And then we start establishing better positions. Hopefully, even if we hit the 200 moving average and all we do is go sideways. If Nvidia goes sideways, don't be surprised to see the S&P do the exact same thing. It's going to be more volatile on Nvidia than it would be on the broader index. But, if we've got what would be that high to low? Right? If we go high to low, I mean, that's a 20+% range. So if we have a 20+% range on Nvidia, could we have like a 5 to 10% range on the SPY? Sure. Or the NASDAQ? Yeah, maybe 10 to 15%. Tesla, I might still get my dollar cost average positions filled, 360, 250, still pending. The other one's down here at 285. And then ratio spread down here, the 280 by 275, willing to own some shares of Tesla. Berkshire Hathaway, did a 1-1-1 on this one. Nope, ratio spread 415 by 410. And then the bond situation, like I said, the 7 to 10 year, it's like the long end of the curve just keeps going down. As the yields rise, bonds going down in the 7 to 10 year and the 20 year. This is probably one of my bigger forecasts for 2025 is something breaks the bond market, right? It could be bond vigilantes. It could be the yields going higher. It can be just nobody wants U.S. debt. But combination of something where it's like, we've been in a 41% drawdown for the last 4 years. We've had 3 out of 4 losing years in the bond market. That's no guarantee that the market has to go up, right? I'm just saying it's interesting. Like it's been so beat up. It's literally like the only asset last year that didn't make money. Every other asset last year made money. Look at this screenshot here. I shared this during my 3 o'clock session yesterday. Look at this. 2024, everything made money except for long-term bonds. That's embarrassing, right? So you've got losing year here in 2021, losing year in 2022, terrible losing year. We carved out because of the Q4 rally in 2023. That was the only reason that this market was positive in 2023. It literally came in like a month. The market just ripped off those like October, November lows, and it got into positive territory to close out for the year. But here we are right back in, resuming a downtrend. So long-term treasuries are just awful. And at some point, the trade-off is if investors realize that equities are riskier, then they're going to flood into bonds. And, we're also at the highest correlation that we've seen on history. Bonds and equity correlations at 0.76, which is the highest we've seen ever. So again, I think that, they're going to trade with some type of differential where at some point this goes down, bond market probably rallies, equity has some pain. Don't know when. But anyway, that's why I'm looking out to 2027, because I'm not trying to time this movement. If I'm establishing a long on the bond position, I'm essentially saying from now until 2027, does this market find a way to go up at all? Does it bottom out there? Does it go a little bit lower with divergence and then, give us a bullish pattern? I have no idea. But if I can time that over a 2-year window, I'll make some money. And the nice thing is do I have to wait 2 years? Nope, I don't at all. Because if somehow this thing goes back up and we're above 91, then I make income. If we go down here, then I will roll this and lower the cost basis more and more. So instead of this $21 debit, maybe I can lower this down to like 15 bucks. And if I can still turn it into a nice profit, I'll do that. So whatever. All right, that's that. 10-year yield. Screw it. I'm so mad. Like 10-year, this is going to make mortgage rates get back above 7%. It's not that far away. And if you look at mortgage rates now, it's like we're no better off than where we were in summer of 2024. Okay. And if we start getting above 7%, then we're no better off than really like March and April. Like this would suck, man. And I'm in this market. Like I'm supposed to be closing on a house mid-April. That's all I got to say. Like not fun. So numbers are going to look like trash. Fortunately, it's a early enough phase where there's equity built into like, as the neighborhood gets finished out. But my gosh, man, I'm going to be annoyed with a, 6.5 to 7% interest rate. So, and I think the days of a, sub 4%, that's like a dream come true at this point. I know it's an interesting market, right? Like there's like 60 or 7% of all mortgages in the US, 30-year fixed mortgages are like sub 4% or sub 5%. Like most households have like very low interest rates because they either bought during COVID or they refied, and they're sitting on those low interest rates. But the problem is they're not moving because they're not going to sell their house at a high price and then move with a 1.5 to 2% higher interest rate. So it's a stuck market, and I think real estate's another thing in 2025 that could be a bit messy. I know. I'll let you know. All right. I see a couple currency requests. Dow we already talked about. That's US 30. So I'm looking for a little bit deeper correction. I'd love to see the Dow pull back 10%. So your US 30. If it pulls back, I'd watch this 200 moving average. Somewhere in here, I like the US 30. So I'd like to see maybe 41,000 get tested. So if this is a little bit of a flush, a little bit of follow through, but then we start to see some scooping up there. So 41,000 looks attractive. Aussie dollar, I'm still holding long, but small positions. Yep. So I'm building small on the Aussie dollar for right now and willing to take this thing down to 6,000. Again, I know I'm early. I'm very early to trade, but if the dollar pulls back in the short term, then maybe the Aussie dollar pops back to like 63 or 64. If that's the case, I'll take the profit. I've got 1, 2, 3 positions in, and I'll take some profit. If I get this one better than break even and have 2 winners, I'll take profit. So I'm not trying to fight it, but if we end up flushing lower, then I'll just wait for that trade down here at 6,000. So Aussie dollar, New Zealand dollar, I'm long. Dollar CAD, dollar Swiss, I'm long. So there's a bit of a hedge there, obviously. Dollar CAD, I'm still going to hold long. Non-farm is Friday, so we have employment news out of CAD and dollar. I don't know if this ultimately hits my profit target. Hopefully it does. If this one gives me a pullback, I might end up taking another buy trade to establish that follow through. I think we can hit 45 or 4,600 on dollar CAD. And dollar Swiss, I'm still holding to 9,200. Again, I'd like to add more to it, but I'm just not. I've got 1, 2, 3, 4. I've got 7 positions running right now, and I've got another like 25 running in my TastyFX account. So yeah, 9,200 is fine for me. That's it. Okay, so I'll wrap it up there. 11:30. Have a good Tuesday. All right, see everybody. Thanks. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.